welcome to The Explainer. Today we're jumping into a really fascinating day on the Indian stock market, December 3rd, 2025. Now, on the surface, it looked like, just a bit of a dip. But once you start peeling back the layers, you find this incredible story, full of contradictions and some really surprising strength. So let's get into it. Okay, let's dive right in. The main headline for the day was pretty simple. The market was taking a breather after a really strong run. But what's actually interesting is this tug-of-war that was happening just beneath the surface. You've got this battle between short-term jitters and this deep, long-term confidence. So, the main benchmark, the Nifty 50, it slipped by just over 0.5%. Now, that number by itself, it might not seem all that dramatic, but here's why it matters. This was the third straight day of declines, with the market closing at 26,032. And that is a pattern that really gets traders to sit up and pay attention. And this really gets to the heart of the tension we saw today. On one side, you had the sellers, who definitely had the upper hand, pushing the index down for a third day. But on the other side, if you kind of zoom out and look at the bigger picture, the market's long-term upward trend, this classic pattern of higher highs and higher lows, is still holding strong. This is what the experts would call consolidation. It looks like the Nifty is just kind of stuck in a range, right? It's bouncing between a floor of around 25,850 and a ceiling up at 26,300. It's almost like the market is just taking a pause, catching its breath, and trying to figure out what its next big move is going to be. And that pressure? Well, it hit the banking sector even harder. The bank Nifty index actually fell a little more than the broader market, dropping about 0.7%. That tells us that some of those big financial stocks were a really key part of what was dragging the market down. But here's where the plot thickens. Not everything was in the red. A whole group of what you might call defensive stocks, the stable, reliable companies, they acted like a cushion. We saw this really clear rotation of money out of some of the riskier stuff and into these household names. I mean, look at Asian paints rallying over 3%, completely bucking the market trend. So if the overall market was kind of treading water, where was the real action? Well, let's zoom in on the individual movers and shakers, because that's where the most dramatic stories of the day really played out. And let me just introduce you to the day's absolute superstar, Spice Lounge Foodworks. This stock wasn't just up for the day. It has posted a truly mind-boggling 900% gain over the last year. And no, that is not a typo. 900%. So what in the world is fueling this rocket ship? Well, this slide lays it out perfectly. This isn't just hype. The company's numbers are absolutely on fire. In just one quarter, sales shot up 157%, and profits exploded by an incredible 310% compared to last year. I mean, that's the kind of growth that makes absolutely everyone sit up and take notice. Another huge winner was Spark. Its shares surged an incredible 34% in just 2 trading sessions. And the trigger for that? A massive U.S. court victory for one of its key drugs, which basically changed the entire outlook for the company overnight. And it wasn't just about these spectacular price jumps. We also saw a bunch of companies announcing major business deals, which is a great sign of strong health under the hood. We're talking about everything from hundreds of cores and new projects for companies like NBCC and BML, all the way up to a massive, get this, 15,750 core joint venture for JSW Steel. Now, of course, none of this is happening in a vacuum. To really get what's going on, we need to zoom out and look at the global economic pulse and see how all these external forces are shaping what's happening right here in India. And the biggest story on the global front is the rupee. It actually weakened to a record low, touching 90.05 against the US dollar. A big reason for this is foreign investors pulling money out of the market, and that's a trend that has a ripple effect across the entire economy. A weak rupee like this is a classic double-edged sword, and this slide shows it perfectly. On one hand, it's fantastic news for exporters, like our big IT companies, because the dollars they earn are now worth way more in rupees. But on the other hand, it really hurts importers, which makes everything from fuel to electronics more expensive for all of us. And if you look at the global commodities market, you see a really mixed bag of signals. You've got industrial metals like copper surging because of supply fears. You have digital assets like Bitcoin roaring back above that $90,000 mark. And then you have oil dipping, which kind of hints at worries about a slowing global economy. Each one is telling its own piece of the global story. So, with all these conflicting signals floating around, a market that's consolidating, some incredible standout stocks, and a pretty volatile global picture, what are the experts watching for next? Well, one area that shows absolutely no signs of slowing down is the initial public offering, or IPO market. And that's a huge sign of underlying confidence in the economy's future. And the demand is just incredible. The recent Equus IPO was more than 2/3 subscribed on its very first day. And even more amazing, the retail part of the massive Micho IPO, it was fully booked in just 1 hour. That just shows you how eager investors are to find the next big growth story. And maybe this quote from the global investment bank HSBC just sums it all up perfectly. They're basically saying that despite all the short-term noise, India looks like a very attractive place to invest, especially when you compare it to some potentially overheated bubbles elsewhere, like with AI stocks over in the US. And all of this leaves us with a central question of the day. For any investor trying to navigate this complex environment, is this a moment to play it safe and stick with those defensive stocks we saw earlier? Or is it the time to go on the offense and start hunting for the next spice lounge in all this volatility? That, right there, is the billion rupee question.